What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to look at weekly technical analysis and we'll look at all of the major indices and try to figure out where the market is likely going from here. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So looking at SPY's weekly chart, we could see that we did have a very bearish week and we have now 3 red weeks in a row as we're quickly approaching what I expect to be the support level on the weekly chart of SPY, which is down here at 430. Now, if you go back to the weekly technical analysis from the July 31st closing candle, I drew out this expected path of where I thought SPY could likely go in the short term and then where SPY was likely going in the longer term. So the short term projection after a very bearish candle is obviously bearish, and I told you the short term I thought we would pull back towards 430, and whether or not we go a little bit lower or don't hit it at all is not the goal of this analysis. The goal is identifying the weekly trend and looking at the technical indicators and trying to figure out where we could go from here. So because we are in a weekly bull trend, I think the highest probability chance is that on the weekly chart, we are likely putting in a higher low before the next higher high. And I do believe that higher low is going to be between SPY 420 and 430. Now 420 is going to be the support trend line if we break below 430, and 430 is a retest of the breakout of the August 2022 highs, which is very likely where the market is trying to retest to make a higher low before we continue higher. Now it's always possible to get a stop rate, and if everybody is looking at that support, it is possible we undercut it, and in that case we could likely go to SPY 420 before we hit the higher price targets. So just technically speaking, looking at the price action of the trend, it is completely possible in a weekly bull trend to continue this trend, which is telling us we are still looking for higher prices until SPY breaks down below the support trend line. Now, there's nothing magical about a support trend line. We are simply looking at the current pattern of the trend. So you could technically break the support trend line and still find support and still find your way back into a bull trend, but we are not interested in guessing. We are instantly going to assume the bull trend is very weak and likely heading into a bear trend if we lose this critical support zone that I've already given you. So in the short term, keep in mind that nothing moves in straight lines. So even though it is likely we are going to 430, it is possible we bounce to a lower high, and that lower high could go as high as 448 to 450. And it is possible if we bounce to that lower high, then we continue lower towards 430 and still hit that price target before we go any higher. Now keep in mind, this is weekly technical analysis, so we're not necessarily interested with the volatility day to day. Every candle on this chart is one entire week's worth of price action. All we're trying to figure out on this chart is where we are likely going from here. So in the short term, we're looking for support to hold right around 430, and then from 430, we are likely continuing this bull trend higher towards 480. And right now, the way I have this arrow drawn, that arrow would hit 480 by February 2024, but timing the market is very difficult to do. I would focus on making sure you're on the right side of the market, and if you're swing trading, making sure you understand the trend direction, and then letting time do all of the rest of the work for you. If you're on the right side of the trend, you simply hold your trades and you continue to check the charts to make sure nothing else is changing. And as long as you're on the right side of the trend, those swing trades will continue to make you money over time. So right now I am saying that we are still in a bull trend. On the weekly chart, there is nothing that tells us the bull trend is over. This is still well within the realm of a pullback, which could lead to a correction, and corrections and pullbacks are completely normal in all bull trends. As I just said earlier, nothing moves in straight lines, which includes bull trends, which means we are looking for higher lows before we make higher highs. So I believe we are still in the process of looking for where that higher low is going to be before we continue higher in this bull trend. Now next, let's throw on our technical indicators, and I did do a tutorial on how to set up your chart to look just like this, and there is also a discount you could take advantage today on TrendSpider, so if you're watching this video on Sunday, feel free to take advantage of that discount and you can find the link below. Now looking with our technical indicators, we can see price action is quickly approaching a rising weekly 20-period moving average, which is also that support zone right around 430. And as long as price can stay above the rising weekly 20-period moving average, there is no reason to believe the bull trend is over with. Now, if we slice right through it like it's not even there, then that's instant reason to get more risk off, but so far we're still above it. The weekly RSI is telling us we're still above 50, so we still have bullish momentum. The weekly MACD is still above 0, even though it does look like it could be very close to crossing over. Never assume something is going to cross over, wait for confirmation. And you can see we still have positive momentum on our Bollinger Band squeeze, even though in the short term we are scrubbing off a little bit of momentum, we are still positive. Now let's very quickly go ahead and assume this MACD is going to cross over into the red territory. When you are in a bull trend, that is possible that does occur, and we can just simply go back here in time on our chart, and we can see this other period of a bull trend in 2020 when we had bullish weekly RSI and bullish MACD, it was possible for that MACD to cross over and get a red week of momentum while we were approaching the weekly 20 period moving average. But again, as long as the price action held that support and we bounced from there, the MACD went right back over to positive territory and continued to climb higher. So do not assume just because this MACD may roll over and we may see it cross over to red territory, that does not mean anything as long as we can hold above the weekly 20 period moving average. So that support I told you at 430 is very critical because we need to hold above that level on weekly closes to maintain our bull trends. If SPY breaks below 430, then we instantly need to start getting a lot more bearish, because we don't want to be holding long-term swing trades if we're thinking the trend could be rolling over and we could be entering a bear trend. So just a quick summary, there is nothing on this chart that tells us the weekly bull trend is over with. If anything, it's telling us we're approaching a very good risk-reward buying opportunity as we approach critical weekly support at SPY 430. Again, that doesn't guarantee we're going to be correct. We are simply looking to stack odds in our favor, and right now the odds still favor that we're going to continue higher within a bull trend. Jumping over to the weekly chart of the triple Qs, we can see the same exact story as SPY, where the MACD has crossed over and we're getting a red print, but we have not yet broken down below the critical support at the rising weekly 20 period moving average, which is that support right around 351. Keep in mind, this is a rising moving average, which automatically tells us we're in a bull trend and price is still above the moving average. So that is where we are looking for support on the triple Qs between 351 and 355. Remember, these moving averages are rising, so it is going to move each and every week, continuing to climb higher as long as price can hold above it. Now, the RSI is still above 50 on the weekly chart, the MACD is still above 0, and on our histogram, we still have positive momentum as we're approaching critical support. So on the triple Qs, you're instantly getting a lot more risk off if price cannot hold above weekly closes of 351. On the daily chart, that's about 355, so we are in a strong support zone, which means within a bull trend, we are at a great risk-reward ratio because we have very well-defined risk at critical support. Now, jumping over to a weekly chart of the Dow Jones, it's very important to pay attention to the price action we're currently seeing because on the weekly chart, we have this inverse head and shoulders breakout above the neckline above 340, and above 340, as long as price can hold this neckline breakout, this simply looks like an inverse head and shoulders breakout, retest as support, and continuation pattern towards previous all-time highs. So in the Dow Jones on the weekly chart, as long as the Dow Jones can hold above about 342 and continue to close above it, it is possible we are then going to 370. If you take a bounce from the neckline support as a retest all the way back up to the price target, that is still nearly an 8% gain in the Dow Jones to finish out the year. That's very similar to what I'm seeing in SPY with the bounce off 430 and then starting to head higher towards 480. So we're getting a confluence of agreeing here with the Dow Jones also telling us we could be getting ready to bounce and go to higher prices. Now manage your risk right there at the neckline breakout because obviously everything is possible to fail and this could have been a false breakout, and you're going to know that if the price action starts closing below 342. Now looking at our technical indicators, we still have positive momentum and we have that weekly squeeze, which could still fire and release energy in the upward direction, which does match our technical analysis on the price action. MACD is still positive and RSI is still on bullish momentum, and we're right above a demand zone on the volume shelf as we're retesting that inverse head and shoulder breakout. And then finally, we have the Russell 2000 IWM ETF, which is currently sitting right on top of the rising weekly 20 period moving average, and we do have bullish momentum firing on the weekly squeeze, which means this is now the best risk reward ratio for the small caps at support at 183. The catalyst is going to be the bull breakout above 197, and then I believe we will start running into the 220s. However, all of that is instantly off the table if we can't hold support at 183 because that means we'll be losing the bullish momentum, breaking critical support in the price action, and remember, I always tell you price action is king. Nothing else matters if price action is breaking down, so if IWM starts breaking below 183, you instantly need to get a lot more bearish. Now above 197, we're getting bullish, so you could also wait for a bull breakout. However, if you're a longer term swing trader or an investor, you want to accumulate or buy as we're going lower so you get a lower cost basis, and right now IWM is giving a great opportunity to do so right here at 183. RSI is right there at the 50 level, which is the neutral momentum, but as long as we can hold above it, we can maintain bullish momentum, and MACD is still above 0 with positive histogram. So it is possible in the next 7 to 8 weeks, IWM is going to push higher towards the 220s, and the catalyst will be that break of 197. So jumping back over the S&P 500, this is still my expectation that we have weekly bull trends across the board, and it's not until we break down below the weekly 20 period moving average and lose the weekly critical support that we can assume anything else is happening objectively. Remember, the bears have been the ones getting it wrong all year long, and you do not want to become one of those bears that says the sky is falling and that we're going to come crashing down every time the market has a pullback. Pullbacks are completely normal and to be expected, and they're actually healthy for all bull markets because they allow us to reset greed and build up energy energy to go for that next leg higher. So I do not suggest you get overly bearish during a pullback. If anything, this is the time to consider buying and taking on great risk reward ratios and setting up your swing trades for long positions. Obviously, everything is subject to change, so if we lose critical support, then we're going to start tracking a downtrend within what could be a bear trend on the weekly chart, but right now it's a bull trend and we can only trade what we can see on the chart, and right now we still see bull trends across the board. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.